Well, the markets are the markets this morning. They're about as flat as they can be. Tesla is kind of up and down around the zero mark this morning, but after a couple of days of really good action, it's going to take a probably going to take a little stimulus to get it going again. But I see some stimulus in the commentary that you're going to listen to right now. We got a lot of news for you. Housing prices, a bright spot this morning. We've got consumer confidence. Well, anyway, we'll have all of that for you later this morning as we continue through here. Tesla seems to be preparing for a monster Q3 and Q4 2025. Teslarati is now watching my program, and they saw over the weekend how I was reporting this before they did. This was at least hinted at by some job openings that have been observed by industry watchers in the Tesla Careers website. As observed by avid Tesla watchers on social media, the electric vehicle maker has gone live with several dozen openings for delivery vehicle prep specialists on its Careers website. In North America alone, about 69 job openings for the position have been listed by the company. Strange number. The role of the delivery vehicle prep specialist is notable as they help with vehicle prep. Yeah, well, that's what they would do. Vehicle inspections, effective lot management, and active collaboration with your team to enhance pre-delivery processes. Considering that the position ensures that cars are handed over to customers in the best way possible, it seems futile for Tesla to ramp up its hiring for that post if it's not expecting a lot of deliveries. Now, what I would be speculating on is that they're going to really be making sure that people test FSD. We know they started that about a year ago. I wonder if they kind of, how companies do, even probably Elon Musk companies, they might have kind of slacked off from that. Let me know in the comments below if you picked up your Tesla vehicle recently and they didn't give you FSD, 20 minutes of FSD and testing so that you could make a decision about purchasing it. So maybe they're increasing. I mean, again, obviously it's going to be a great third and fourth quarter. The question is, are they hiring because they just need extra people to handle the influx of new orders, or are they hiring people because they want to make sure they give them the time? Anyway, Tesla Chan was the one that they pointed to. Tesla Chan got the information, so give credit to him. Tesla's vehicle sales in the first and second quarter of the year have been quite throttled. We know this, of course. With this in mind, it would appear that Tesla is indeed preparing for a massive uptick in vehicle deliveries for the remaining months. The company, after all, would likely be quite busy, especially with the upcoming introduction of the new Model 3 Performance and the rollout of the Tesla China's recently unveiled Model YL. Expectations are also high that Tesla is preparing to roll out the more affordable variants to its vehicles later this year. I'm starting to believe that that is going to start in Berlin and not be offered in China or the United States until the first of next year. That's my current theory. Business Insider. Now, one of the other things I've noticed for a week now, maybe longer than a week, maybe it's been like 2 weeks, the mainstream media is not attacking Tesla. I mean, it has gone to neutral or even positive. Business Insider has never been a friend, but here's another neutral article from Business Insider. It says Tesla is turning to a well-worn blueprint to train its humanoid robots. The car maker told employees in late June it would focus more on vision-only approach for Optimus programming. Insiders familiar with this situation told Business Insider. Tesla previously used motion capture suits and virtual reality headsets to record data from human operators and remotely operate the robot. Now, the automaker will primarily focus on recording videos of workers performing tasks to teach the robot how to do things like pick up an object or fold a t-shirt. The company said moving away from motion capture suits and teleoperation would allow them to scale data collection more quickly, according to the insiders. The change marks a significant shift in Tesla's robotics strategy, aligning Optimus with CEO Musk's long-standing belief that AI can master complex tasks just using cameras. The automaker has long used a similar approach to train its autonomous driving software. Yeah, we know this. It's a big debate right now back on X. Everybody's like, why don't they have LiDAR? Oh, well, they don't have LiDAR. Seriously, we don't need the LiDAR. In fact, it gets in the way. Just ask Elon. He probably knows more about it than anyone. The change occurred shortly after 𝐂𝐦𝐚𝐢𝐥, the director of Optimus program, stepped down. AI director 𝐓𝐮𝐞𝐬𝐝𝐚𝐲 has since taken charge of the program, the insider said. Teleoperation and motion capture are standard industry practices to train robots, but what we're seeing is maybe a switch. It's unclear whether Tesla will prioritize motion capture suits and teleoperations again in the future. Obviously, they don't know. Robert Griffin, a senior research scientist at the Institute for Human and Machine Cognition, told Business Insider that a large set of teleoperation data allows the robot to learn by physically interacting with its environment. It can be difficult to do that with just the video, he says. If you're just using video data, you don't have this directly. Okay, Konstantinos Laskaris, a director working on Optimus hardware, appeared to acknowledge the new strategy in May. It seems unbelievable that our robot is learning new tasks directly from human videos. Musk also said in May that the robot will eventually be able to learn how to perform tasks by watching YouTube videos. The company briefly paused hiring for the Optimus team amid the transition. Insiders with knowledge of the issue said, as of late August, Tesla's careers page listed more than 50 Optimus-related roles. Then we have this from Investors Business Daily, also just positive or neutral. Tesla's vehicle insurance registration in China fell sequentially last week and remained well below last year's total during the same time frame in the third quarter. Meanwhile, Tesla stock flirted with the traditional buy point during Monday's stock market action. Tesla's insurance registrations last week were 10,300. That would be down 26% from the 14,000 the previous week, according to data gathered by their local folks over there in China. 8 weeks into quarter three, Tesla registrations in China, a rough gauge for deliveries, are up about 48% compared to last quarter, but have dropped 12% from a year ago. That's pretty good considering the first quarter. They should mention that. So far this year, Tesla vehicle registrations in China have declined 7%. Again, very acceptable given the beginning of the year. Now we might think, and I mean, one of the problems with China is I think they're maxed out, but maybe they're going to be able to get way more out of that factory than we know. Last week, Tesla launched a new, slightly larger, we know this, the Model Y. That variant doesn't start production in the US until the end of next year, according to Musk. We knew that. Overall, analyst consensus sees Tesla global vehicle sales declining 7% to 430,000 in the third quarter, according to FactSet. That would mark a 12% increase versus quarter two and would be the highest level of 2025. That number is not going to, they're not going to be close to that. I'm right. I don't do a detailed analysis. I'm thinking we might approach 500,000. Given what we've just learned about the U.S. tax code. Then the fourth quarter is going to be great too. However, only one analyst has revised their 2025 vehicle deliveries since late July. Analysts broadly expect U.S. deliveries to be because of the IRS thing. Tesla shares edged down around 0.5 before the opening bell, and on Monday, Tesla stocks rose briefly to the $348.98 buy point in the cup with handle base. So I saw some people saying this morning that if we break through 350, it'll be a rapid up to 358, a big slot there that needs to be filled, according to technical analysts. Market share charts. This comes after Tesla stock jumped 6.2% on Friday, rebounding from its 50-day moving average, reclaiming the 200-day line and breaking the downtrend in the handle, offering an aggressive entry point. Reflecting retail investor interest in Tesla, Tesla stock was one of the top tracked by the subreddit investor group Wall Street Bets website. App Wisdom showed Tesla as the fourth top trending issue on Wall Street Bets as of Tuesday. Barron's, which of course is always neutral to positive, on Tuesday, Baird analyst 𝐑𝐚𝐬𝐝𝐴𝐿o reiterated his cautious stance on shares after the run-up, with financial estimates too high. He called the setup for shares tricky in a research report. Investors are clearly focused on the future, but performances of the car business is struggling. The relative lack of emphasis paid to fundamentals over the last several quarters indicates investors are more willing to wait for the longer-term opportunity regarding robotaxi and Optimus, added the analyst. Acknowledging the increased patience, we remain cautious with volumes and financial estimates for second half 2025 too high, and the automotive business continued to show signs of weakness. 𝐑𝐚𝐲 is concerned about losing the $7,500 tax credits and lower sales of zero-emission vehicle credits, both of which are a function of changing policies in Washington. He expects Tesla to earn about $1.68 and $2.12 a share in 2025 and 2026. That $2.12 is going to be so completely wrong, he'll just go look back and go, how did I even come to that? Wall Street expects about $1.70 and $2.44, which is still way too low for next year, according to FactSet. 𝐑𝐚𝐲 rates shares a hold and has a $320 price target for the stock. The average analyst price target now is $314. Tesla stock gains on Monday came when the S&P dropped 0.4. And despite 𝐑𝐚𝐲's concerns, it's possible that traders are feeling better about Tesla stock after shares recently closed above their July highs. Monday's close was the highest since June 23, the day following the launch of the EV maker's self-driving taxi service in Austin. The launch was significant for the company. Bullish Tesla investors believe AI-trained robotaxis will usher in a new area of earnings growth for the car company. Tesla shares rose almost 50% between its October 10 robotaxi event in Hollywood and the launch of the services. Since that launch, shares have fluctuated, with investors waiting for another catalyst. Yes, true. Expanding the robotaxi service to more cities could be the catalyst. That hasn't happened yet, but traders might be anticipating the company's next move. They're leaving out several other catalysts, which we talk about here all the time. You know what they are. TSLA has this also. The Tesla Cybertruck is being launched in South Korea. The arrival of the all-electric pickup truck in the country was announced by the electric vehicle maker in its blog post on social media. Tesla Cybertruck launch. As per Tesla Korea, those who have reserved the Cybertruck could log into their Tesla account to confirm their order. Customers can confirm their orders from August 29 to September 4. So if you're in Korea, you can now get your Cybertruck. Cybertruck, the most confusing product in the Tesla product line. I have no idea what they're doing, what their plans are, what the problems are. I mean, it's very confusing. This is Randy Kirk. Hit like, subscribe, notify, all that jazz. Thank you. We, of course, had one person join Patreon yesterday, and I appreciate it so much. Later today, you will have the regulars. You'll have Nicholas Gibbs, and back after a week off. Super interested to hear what Nick has to say tonight. And I've already, of course, recorded the Brian White video, which was very, very cool and fun. It was a great one. So look forward to those two tonight. New orders for manufactured durable goods in July were down 3 of the last 4 months, and they decreased again by 8.6 billion, or 2.8% to 302.8 billion, according to the Census Bureau. This followed a 9.4% June decrease. Excluding transportation, new orders increased 1.1%. Excluding defense, new orders decreased 2.5%. Transportation equipment, also down 3 of the last 4 months, drove the decrease 10.9 billion, or 9.7% of the total. I didn't look into the details, but the last few months, this has all been about Boeing. But the rest of the durables are flat, and it seems that durables are continuing to be in that position. Shipments of manufactured durable goods in July, up 8 consecutive months, increased 4.3 billion, or 1.4%. This followed a 0.7% June increase. Transportation equipment, up 7 of the last 8 months, led the increase, 2.3 billion, or 2.3%. June's results marked the continuation of a decisive shift in the housing market, according to S&P Case-Shiller. So here you go. You ready? National home prices rising just 1.9% year over year. That's the slowest pace since the summer of 2023, said Nicholas Godek, What makes this declaration particularly noteworthy is the underlying pattern. The modest 1.9% annual gain masked significant volatility, with the first half of the period showing declining prices that were more than offset by a 2.5 surge in the most recent 6 months, suggesting the housing market experienced a meaningful inflection point around the start of 2025. The geographic divergence has become the story's defining characteristics. New York is up 7% year over year, even though everybody's leaving New York. What's going on there? Leading all markets by a large margin, followed by Chicago is also up 6.1% and Cleveland up 4.5%. And this represents a complete reversal of the pandemic era patterns, where traditional industrial centers now outpace the former darlings like Phoenix, which is down 0.1%, Tampa down 2.4%, and Dallas down 1%. Tampa's decline marks the worst performance among all track metros. So what you got here is, I think, I haven't looked, I didn't go deep into this, but my guess would be all those New York, Chicago, Cleveland, et cetera, they were not doing as well. And now they're picking up a little bit. I have no idea why. It makes no sense. But the other areas had gone crazy. They're really, really high, and they're kind of backing off a little bit. For the first time in years, home prices are failing to keep pace with the broader inflation, Kodak observed. From June 2024 to June 2025, the consumer price index climbed 2.7%, substantially outpacing this 1.9% gain in home prices. This reversal is historically significant. During the pandemic surge, home values were climbing at double-digit rates, far exceeding the rest of we remember where the Fed kept saying over and over again, it's the housing prices, it's rental prices. That's what's killing the CPI. The monthly patterns in June reveal a market caught between seasonal forces and underlying weakness. 13 of the 20 metros posted monthly gains before seasonal adjustment. The national index managed just 0.1% growth. After seasonal adjustments, all three headline composites declined, with the national index falling 0.3%, suggesting underlying housing demand remains weak. Looking ahead, the housing cycle's maturation appears to settling around inflation parity in the future. I think that's probably about right. I think what we're going to see is an uptick probably over the winter as mortgage rates come down. I believe we're finally going to see mortgage rates come down around 6%, and that will give us an uptick. All right, breaking news. The consumer confidence, folks, the Conference Board says that consumer confidence fell by 1.3 points in August to 97.4. And that is down from 98.7 in July and revised up, in August. Okay, which July was revised up by 1.5 points. The present situation index, based on consumers' assessment of the current business and labor market conditions, fell by 1.6 points to 131.2. But the expectations index, based on consumers' short-term outlook for income, business, and labor market conditions, that decreased also by 1.2 points. Expectations remain below the threshold that typically signals a recession. The cutoff date was August 20th. Consumer confidence dipped slightly in August, but remained at the level similar to those of the past 3 months, according to Stephanie Gouchard, senior economist. The present situation and the expectation components both weakened. Notably, consumers' appraisal of their current job availability declined, but stronger views of current business conditions mitigated the retreat of the present situations index. Meanwhile, pessimism about future job availability inched up a tad, and optimism about future income faded slightly. Among the demographic groups, confidence fell for consumers under 35, stable for consumers 35 to 55, and rose for the old folks. The evolution of confidence by income groups was mixed, with no clear pattern. By partisan affiliation, confidence weakened in August among both Republicans and Democrats, but was little changed for independents. Gouchard added, consumers' write-in responses showed that references to tariffs increased somewhat, and continue to be associated with concerns about higher prices. Meanwhile, references to high prices and inflation, including food and groceries, rose again in August. Consumers' average 12-month inflation expectations picked up after 3 consecutive months of easing and reached 6.2% in August, up from 5.7% in July, but still below the April peak of 7%. You can't trust these consumers. Among the write-in responses, there were also a rise in mention of jobs and employment, even though those remain relatively low on the list of themes that consumers were focused on. Most negative comments on the labor market referred to current situation, while positive comments conveyed hopes that things are going to get better. In August, consumers' outlook on stock prices deteriorated slightly, but not too bad. Consumer views of their family's current and future financial situation improved. The shares of consumers expecting a recession over the next 12 months rose in August to the highest level since the April peak. Those measures are not included, though, in calculating consumer confidence. Purchasing plans for cars increased in August. Buyers' intentions for both used and new cars rising. Meanwhile, purchasing plans for homes remained stable. Interesting. Big ticket items were slightly down. That continues. That's durables. Slight, but slightly. Okay. Intentions to purchase more services had improved, but the increases were concentrated in a few areas, mostly non-discretionary categories such as financial services, car, and home maintenance. All right, and we've got the true inflation number this morning, 2.16, slightly up. The year over year slightly up at 199, but still around 2%. And the PCE year over year number is coming down. It's to 2.31 now, as we're going to have PCE at the end of the week. Trump is still sitting at 50%, where he was yesterday. And the GDP, which we'll have that number later today and report tomorrow, the last time they reported it was at 2.3. I will see if that goes up or down tomorrow. According to the Atlanta Fed, we have got the VIX up slightly this morning, but still under 15 at 14.96, but it is falling right now rather dramatically. I would say that could be the consumer confidence and housing numbers that could be impacting. We have got the stock market. We've got the Dow down 0.04. We've got the NASDAQ up 0.16. We've got S&P up 0.04. So I would say flat. Tesla, which has been up and down and up and down, right now is slightly under the line, down 0.22 at 345.82. Again, you heard earlier that it needs to crash through 348 and change in order to move higher to that next level. And right now, Tesla is trending flattish. You've got the Magnificent Seven mostly down, although NVIDIA's up, Meta's up. Okay, you've got the Cathie Woods all doing well this morning, but off of their highs, almost 100% across the board, up, but off of their highs at this point. All right, bonds were down last time I checked. Let's see if they have continued to be in that situation. Did I say bonds are down? I didn't mean that. I get confused. No, it's not age. It has nothing to do with age. Okay, bonds are up 6 basis points right now to 4.281. And we continue, of course, everybody's all concerned about Lisa Cook and what's going to happen with Lisa Cook. And they asked Roger Ferguson of the Fed, they asked him to help them straighten out the confusion. And he said he couldn't do it. It's very confusing. Has she actually been fired? Is Trump trying to fire her? Will Trump go to court to fire her? Will Lisa Cook go to court to keep from being fired? What does it all mean? And why is it so hard to determine whether these people have done mortgage fraud? It's 2 documents. You got document A, document B. If both of them say, this is my primary residence, and one of them, in Lisa Cook's case, shows that she was renting it out, this document showing that she rented it out, you take the 3 documents. What's the prosecution waiting for? I'm confused. This is also true for stupid Schiff here in California and for what's her name there in New York. I forget her name, the prosecutor. Anyway, I don't want to know her name. I have nothing to do with her. All right, so in addition to the bonds being up slightly right now, we've got oil off of, It's actually moderated since it was down $1. Now it's only down 66 cents, sitting at 64, about where it's been. Natural gas down 0.74 to $2.67. That's, again, that might be the lowest we've seen in a while. Gold up this morning, $4.90, sitting at 3,422. It's been very close to that number for a couple of days now. Silver down just a bit at 0.25 down, 38.60. Copper down 0.19, sitting at $4.47, within a few pennies of where it's been now. It's been very, very flat. You've got the dollar mixed. Do I say that every single day? We've got Bitcoin down another 847, but I think it was down even more earlier. It's at 110,480 though. That's more than 10% off of its all-time high, or maybe right at 10%. Now, the thing about this Bitcoin being down, I think that's signaling, according to some people, not me, I have no idea, but maybe it's signaling that the folks that are doing Bitcoin are worried that NVIDIA will not beat tomorrow. I don't know, but that's a possibility. All right. So, as I mentioned earlier, you will have Nicholas Gibbs later today, and it will be incredible. I'm telling you, we're going to have so much fun. I can't hardly wait. And then you got Brian White. We already had that fun last night, and you'll really enjoy it. But I want to tell you that last night, Brian White and I talked about betting against Elon. And we gave a list of the people who are going to lose trillions. I mean, trillions. Some people are going to lose millions. Some people are going to lose billions. Some people use trillions. And we didn't even mention Gary Black. He's going to lose because he's betting against Elon. But there's a lot of other people that are betting against Elon that are going to lose a lot more. And it's really odd. It's really weird because of timing. Would you like to know what that's all about? Here's the card for that one. And then, of course, Larry and I, we had, as always, an amazing conversation. And at the end of our conversation, he gave us the number one thing that he believes is the reason he's done so well, investing. So he'll give you the number one reason. If you want to watch that video, there's that card. The last chance on Tesla. Where is it now? Has it gone back into the green? Nope, still down 0.26%, which would be like less than $1, right? That would be, I think that's less than $1. Let's get out of here. Come on, we got to get out of here. Down 90 cents. I was right. Okay, it's been great talking to you.